Good morning and welcome to the VSA Morning Miner. It's Thursday, the 5th of May. Paul, how are you doing today?
And I'm very well, thank you. And looks like an awfully nice day today, too.
Yeah, are you back at Mines and Money?
I am back at Mines and Money, that's right. And the second day starts this morning, so we'll get right at it again.
Very good. Right, let's get into it. I think Central Asian Metals have released their sustainability report. They've done a couple of these now. But Paul, what are some of the highlights from it?
Yes, this is the third total sustainability report they've released, and the second one, which meets the emissions and climate guidelines specifically set out in some of the guidance that's been released since the first printing. Some of the goals they've set for the company, for instance, 50% reduction in GHG emissions by 2030 and net zero by 2050. A lost time injury frequency improvement over the prior period of 2021, which is at 1.69, and you'd want to see that well below 1 as far as a operating company is concerned. They'd like to increase their group or community support on an annualized average basis to 0.5% of group gross revenue. That would be a doubling of what it has been up to this point in time for the communities there around the Coonrad mine and the Sassa mine. They also would like to have a 25% increase in group female employees by the end of 2025, which would be at a higher level than what they currently have in the group. And they'd also like to have at least 70% of their tailings stored in more environmentally responsible manner, and specifically that means getting the paste backfill and dry stacking set up at the Sassa mine in Macedonia by the end of 2026.
Yeah, well, I think Campbell taking a lot of lessons from other sectors and really trying to be a leader in the junior mining space in this regard. So look forward to more of these types of reports.
Paul, and I would say too that just given the number of different things that they can mention within these reports would indicate that the mining sector overall just has a lot of room for improvement in these regards that they can be promoting in their stories going forward.
Yeah. Paul, last night the Fed raised rates by 0.5%, and today we've got two sets of quarterly reports from some of the biggest gold miners. Should we start with Barrick or Endeavour?
Well, I think we start with Endeavour Mining, the African gold producer with a number of operating mines there. It was a strong quarter with on a year-on-year basis, their output was up about 14% or 44,000 ounces from a year ago, but it was down slightly by about 21,000 ounces over the prior quarter. Group AISC costs decreased by $46 an ounce or 5% on a quarter-on-quarter basis. So that was good to see because that's bucking the trend that we see in overall mining sector with increasing cost basis here. So we'll see if they be able to continue that going forward at all. And otherwise, they sold in the quarter the 90% interest in their Karma mine in Burkina Faso as well for $35 million plus a 2.5% net smelter royalty. So from an operating basis, with all-in sustaining costs at $848 an ounce, they're doing really well at this stage.
Yeah, I think that cost reduction was in part helped by that asset sale. I remember them reducing guidance for the remainder of the year a few months back, so that may have helped in part there. But yeah, given the overall trend to keep it low, their other operations is impressive. Did you have any comments on Barrick, Paul?
On Barrick, they also released their Q1 results yesterday. It's actually down a little bit on a year-on-year basis by about 10% on the gold side, but it's up about 10% on the copper side, with copper at 101 million pounds produced. They are on schedule to meet their guidance for the year, they say, and with that, they're confident that there won't have any particular hiccups, even with the rising costs that they see in their production profile. Operating cash flow came in at just over $1 billion, and that was also down on a year-on-year basis, but in this case about 20% or so. Net earnings per share came in at 25 cents, which was down year-on-year by about 5 cents, and adjusted earnings down about 4 cents year-on-year. The dividend was at 20 cents as it was set for shareholders, and will be paid on May the 27th. So I would be a little bit, overall view, a little bit disappointed in these Barrick numbers here, and we'll see if they can improve on that in the next quarter.
Okay, I think we'll call it a day there, Paul. Thanks for your thoughts. We'll, well, I think it'll actually be you and Andrew tomorrow.
Okay, very good.
Thanks. Bye.
Yep. Mm-hmm.